analyst. Let me welcome on board Avinash Gorakshakar, Head Research at Profitmart Securities. And Avinash, coming to you firstly on your take on the crude oil prices, a sharp drop, but which sectors and stocks that one should be focusing at this point in time?
Yeah, good morning, Shrishti. I think crude oil prices largely would benefit, the oil marketing companies. As everyone is aware, their GRMs are closely connected to the crude oil price. So oil marketing companies, and secondly, companies which are into the lubricant space, companies like Gulf Oil, typically Castrol. I think these are also big beneficiaries because base oil is a derived input from crude oil. So once crude oil prices come down, even base oil prices come down. So these companies should also benefit. And apart from that, as Swamit mentioned, paint companies, carbon black companies, typically, specialty chemical companies which consume crude, all these companies are definitely going to benefit. I think the paint companies could benefit significantly because for them, crude accounts for almost 65 to 70% of their total cost. So definitely, I think this is a good move. If prices continue to remain where they are, we could expect a bumper Q3 and Q4 from such companies, and that would obviously lead to a further re-rating in their stock prices. Yeah, I think, basically a couple of days back, some news report had come in that government would restrict ethanol from companies which don't manufacture ethanol either from maize or from wheat. And I think to that extent, there was a sell-off in some of the large sugar counters because government was restricting its supplies, from ethanol made from molasses. So I think now with this clarity coming in and with the government giving a commitment that 20% blending of ethanol by 2025 is very much on, I think removes a lot of fear in the markets because clearly ethanol has been one of the very large profit drivers for most of these sugar companies, especially the integrated sugar players. So I think, players like Dhampur or for that reason, Balrampur Chini, BCL Industries, Associated Alcohol, I think you could see a good amount of bounce. And considering the fact that, crude oil prices have of course come down, but the blending ratio currently is just about 10%. So there's enough headroom for growth for these companies. And obviously, we should expect at least a 3 to 4% increase in ethanol prices every time a large order is announced. So I think net, it's a positive development. What happened in the morning was a correction. I think markets would obviously take note of this positive development and obviously, get normalized in the coming weeks. Lupin, I think, is a stock which should be held on because, after almost 12 to 18 months of consolidation and underperformance, Lupin has shown very strong numbers for Q2. In fact, the management commentary has also been very strong. And in all their markets, specifically Japan as well as US, I think demand recovery is pretty strong. My sense is that, already, the investor has made 50% profit. So probably he can book out some gains, but hold on to the rest stock because my sense is that some further re-rating is possible over the next 12 to 15 months. So probably, if he can hold on for some more time, a further risk reward is definitely possible. So better would be that he holds on and keeps a time frame of at least 12 to 15 months. My guess is, the investor has bought in PFC at a very good entry point. If he can hold on for the next 12 to 15 months, around 425 to 450 could be a good range where the stock could possibly get a fair value. My sense is that, the quantity is also pretty large. So if he can probably, book out 25-30% of his holdings and make his capital free, so the remaining shares become free of cost and obviously hold on the rest for the next 12 to 15 months. A fair value of around 425 to 450 is very much possible. No, I think, if the investor has got a 12 to 18 month horizon, then I think within the EMS space, Avalon is a very large player. In fact, they've got global facilities apart from Indian facilities. And I think the kind of opportunity which we are seeing in the EMS space are quite encouraging. So I think despite a weak second quarter, if the investor has a long-term view, at least 12 to 18 months, he can stay invested, then I think he can definitely accumulate at the current odd levels. I think he can hold on for some time. Maybe buying the stock at a lower level could, give him a better risk reward because recently, BEL has announced that they've got fresh orders of almost 3,500 crores. And visibility for BEL for the next 2 years is completely assured. They have a very healthy order book, plus the business is completely debt free. And within the defense space, I think this is one of those undervalued stocks, but I think has run up post the state election results. So I would believe that, if the stock comes down to say around 145, 150 odd levels, then he can start accumulating, but keep a time frame of at least 12 to 18 months to get a decent risk reward. No, I think Shrishti, clearly, the stock has corrected because the management has given a guidance that they would be scaling down their postpaid, business. Some sort of impact would also come on the unsecured loan portfolio, basically because of the RBI, increase in the risk weightages. But I think at this level, the downside seems to be completely protected. I would not be surprised that the stock could bounce back also quite sharply. Maybe for the next 1 or 2 quarters, there could be some challenges on the business side. But I would believe that somebody who's looking at the next 2 years could definitely look at buying Paytm at these levels. It looks attractive, but yes, from a longer term perspective, I think in the near term the stock could underperform. Yeah, I think within the auto component space, the company has got a very good clientele consisting of the two-wheeler and the passenger car segment. And I think consistently we have seen good numbers reported by the company. So I think around 500 odd rupees, if the investor has a 12 to 18 month time frame, he can definitely look at buying into the stock. Keep a time frame of 12 to at least 15 months. We believe that FY25 should be a lot better compared to FY24. And looking at the revival in the two-wheeler market, I think Sandhar should definitely be. Sherry, this is one company which is a product IT company, and majority of the shares are held by Oracle. There are some reports, for a very long time that finally this stock will get delisted at a significant premium. But even if you look at the fundamentals of this business, it's a very solid, thriving business with very good operating margins. And I think, if the investor has at least a 2 to 3 year kind of time frame, then I think he can even add at the current odd levels. I would believe, the upside could be significant, but I think he needs to give in a lot of time here because, once the stock gets, delisted, I think the premium would be significant. It's a matter of time. So I think he can add on at the current level, but keep a time frame of at least 2 years plus. Yeah, I think it's a very low liquidity kind of counter, but I think numbers have been pretty encouraging. And I think if the investor has a long-term view, at least the next couple of years, then I think you can hold on because typically, whenever liquidity in such companies is limited and participation from large investors is absent, it takes a long time for the stocks to get re-rated. So I would believe that unless the investor has a really long-term view of 2 years plus, then only I think one can stay invested. Otherwise, in such illiquid counters, I would believe it's better to stay away. Thermax looks very well positioned within the boiler space from the capital goods segment. And I think, rather than having a short-term view, if the investor can at least spend about 6 to 8 months here, I think one could expect a decent upside here. The stock is fundamentally very solid. I think corporate capex has been growing very rapidly, and that should benefit Thermax quite significantly. So I think if he can keep a time of 6 to 8 months, he should get a decent risk reward in the short to medium term.